So far, I have not touched upon Infosys, but that is going to change. We have not spoken Infosys as a company for employees, for investors, or Infosys as a company, what it offers. But now that is going to change. Infosys, you all know, uh, has been a bellwether for Indian IT industry. It was a blue-eyed boy. Somehow in last 10 years, it lost its quite a bit of shine, but in last couple of years looks like things are stabilizing and Infosys gaining its market back and also the name back. Okay, so today we are doing some fun exercise, and the idea is to try to anticipate Infosys financials Q4 2020, which is FY21, and let's see whether it has the potential to match up to the industry leaders. And we all know there are two industry leaders. One is Accenture and the other one is TCS. Accenture results we already have, and we will take that as a base, and we'll try to extrapolate some of the Accenture data, and we'll see if those data points can really help Infosys in this quarter and going ahead. Let me show you some of these results which Accenture posted on 18th of March. If we look at the broader indicators or key indicators of Accenture results, Accenture has been posting their revenues in about 1 to 4% of range yearly growth, but this time they posted a growth of 5%. And please remember, the growth of 5% is at huge revenue, which is about $12 billion a quarter, roughly about 4 times or 5 times to Infosys numbers. The next number we have here is new booking numbers. Accenture has hit 16 billion in its new booking order, and this is highest in the industry for any company in IT companies. Please be careful, these are the numbers Q2 FY21, and we are talking about Q4 FY21. Okay, so Q2, Accenture starts its Q2 or Q1 or in fact the yearly cycle somewhere in September October. So their FY21 starts somewhere in September October, while our FY21 has started in April 2020. And the outsourcing growth, if you look at another key indicator, is highest in 6 years. Very good number. Revenue guidance they have raised, and look at the raise they have given, 6.5 to 8.5%. They had brought it down to 2.5 to 3.5 or something like that, and the usual range they have is about 4 to 6%. Okay, so this speaks volume about the demand in the IT industry. If any company does not meet these numbers, will be called underperformance, and market can punish the company really badly. And one key parameter, another key parameter is their utilization ratio is very high. Okay, I have spoken about these numbers in my earlier video on 18th of March. So if you have not checked it, please do check out. It was a small short video. So based on that data, if we look at some of these data points, one is FY21 margin. What is the margin Infosys can predict? We know Accenture's margins are about 14-15%, but Indian IT players margins are quite high. Infosys recently posted about 21-22% in that range for last couple of years, while TCS posts operating margin about 26, 25 or 26%. Their operating margin is very good. In last quarter, Infosys posted a 24% operating margin. So that was a good comeback from Infosys, and that has raised some of the expectation from Infosys. The second point is large deal wins. We would like to see how many new clients they were able to add in 100 million category, in 50 million category, because these give a significant confidence to the market. Growth guidance. Infosys has been giving a good growth guidance about 7 to 9%, but last year, if I look at it, they gave a tepid growth guidance. In fact, I think they suspended their growth guidance because of they suspended that, but they were expecting it was to be 2 to 3% if it happens, but there were so many uncertainties last year. So we should ignore last year. So the last year performance, Q4 20 performance was really bad. Q4 FY20 performance was really bad. In fact, the revenue declined for the first time in many years for Infosys. Okay, the next number is what is the guided margin range they are going to give us for next year, FY22. That will be key. Digital revenue share. What is the digital revenue share? Because when they post their digital revenue share, if I can show you, in the digital space, they have about 31% of growth, and somewhere I saw they have very good operating margin in that segment, but overall their digital segment is growing. We would like to see how this digital segment is growing for them. Okay, and next and last but not least point is their attrition rate. Let me find their attrition rate. As per their COO, Mr. Praveen Rao, 13 to 15% range they are expecting, and it might go by up by 10%. So they are fairly comfortable with these kind of numbers. They are not expecting huge attrition, but this is their expectation. What is happening in the market? Please, if you are working in IT industry, we have seen huge demand for techies, and almost every company is hiring right now. I personally know many companies. So if there is a good demand, external demand, probably people would like to switch. We will have to keep an eye on that. Okay, there I was saying that Q3 number were spot on, and they posted about 16.6% growth. Also their revenue growth outlook was improved 4.5 to 5%, which was about 2 to 3% earlier. The usual growth guidance they give somewhere around 7.5 to 9.5. Okay, earlier they were in double digits. The only company which post double digit growth guidance is TCS, which is above 10%. Otherwise Infosys was in the same range, but in last 5-6 years they have come down to about 6-7%, 7-8%. Okay. and what else is there? Any other data point I can talk about? Probably no. Here, if I look at some of the historical data we have here, Infosys Q3 performance, and from Q1 FY18 we have their operating margin and their revenue. We can see their operating margin has always been consistent about 24 and 25%, somewhere in between. Somewhat it has declined in Q1 FY19, that came down to 23%, and then it further fell down to 21% in Q4 FY19. Okay, in Q1 FY20, again this remained, or the whole year FY20, this remained at that level only. So compared to TCS while was on the upper range 24-25%, Infosys was coming down in 18 and 19 and stabilized around 21, FY20. In FY21 they came back with a bang. Okay, FY21 was little improved, and that is April to June quarter 2020, and then their Q2 was spot on and the Q3 was spot on. Because of this, if you look at Infosys result, Infosys stock market performance in last since December. Okay, I think they came up with the results in December. When did they come with the results? On 13th of Jan. 13th of Jan they came up with result, and since 13th of Jan, if we look at it, though the share price has not gone too well, it is consistent, almost at the same level, but the broader market has changed in last few sessions. Probably because of that also there is an impact, but Infosys was rewarded for their Q2 performance, and I was showing you Q2 FY21 performance, and if we go 3-4 months back, maybe October, December, October, here, look at here, from here they covered fair bit of distance. That's the stock has given at least 30% growth since their Q2 results, so it has been rewarded in that sense. Now coming back to the numbers of Accenture. Other than Accenture number, we spoke about Accenture is fairly a large company by market share as well as their revenue. Okay, but two things are happening which gives confidence to market. After the results from Infosys, TCS has given their resources second increment in just 6 months. Last increment was in October 2020, and then the second increment they have come up in they are going to implement from April, in just about 5-7 days. Okay, Accenture number, TCS outlook or TCS increment cycle which they are coming up just in 6 months time, both are giving us significant indication that the numbers will be impressive. And what impressive means for Infosys is their margins should be above 25% for sure, and in last quarter their margin were 25.4. anything beyond that will be very important, and large deal win size will be looked upon, and growth guidance FY22 should be solid, and if they can somehow go above 8 or 9%, or if they can go towards 10%, nothing will be like that, and the stock will run. And attrition rate, if they are able to keep that low, as well as digital revenue, these all things will be watched very carefully by market. And we know Infosys has stabilized in terms of the turbulence we have seen in Infosys for past few years, so that should be important criteria, but now it is stabilized. The leadership is looking solid, so it is good in that sense. Now about these numbers, if they are solid, we will have our huge rally in Infosys, because Infosys share is still undervalued compared to TCS stock, which is about 36-37 times to their earnings, while Infosys is about 30 times to their earning. Okay, so Infosys has that strength to run that much, at least to give us good returns. Okay, with that I will conclude our discussion on Infosys. I will talk about some of the other aspects on Infosys, maybe how they have handled last 5-7 years, the leadership change from Vishal Sikka to Mr. Salil Parekh, and before that what happened in between, and how this impacted their employees' morale, how is Infosys seen by current set of employees and prospective employees, of course. So I will come up with that video very soon. One video I am planning to come with a comparative analysis between TCS versus Infosys. That too is also in the pipeline. So hopefully I will come back very soon with you with more Infosys news. Again, not to forget the result day of Infosys. We will keep watching Infosys because it's our favorite stock, favorite company, so we cannot let it go like that. Okay, with that we should stop here, and I look forward to your comments. Please write me what do you think of your company Infosys. If you have invested, do you work in this company? How do you see this company moving forward? Yeah, so stay connected, stay safe, take care.